Hello, I am Amanda Kizer, the Director for Impact at Nuveen, the asset management firm of TIAA. TIAA was founded more than 100 years ago with the purpose of providing a stable retirement program for teachers in the United States. Today, TIAA serves more than 5 million people and 15,000 institutional clients. TIAA's commitment to responsible investing goes back more than 50 years. Since Nuveen was acquired by TIAA in 2014, our organization's commitments have continued to expand and deepen. Today, we have a team of more than 30 dedicated responsible investing professionals. And our leadership has been recognized by leading industry organizations, such as the UN Principles for Responsible Investing, Morningstar, and Environmental Finance. But what exactly is responsible investing, you may be asking? The market applies different names to what is now probably a common theme. To TIAA and Nuveen, responsible investing encompasses ESG, socially responsible investing, sustainable finance, and impact investing. We utilize three core pillars: ESG integration, stewardship, and impact to deliver on our responsible investing objectives. ESG integration is the process of incorporating material ESG factors into our investment analysis across funds and asset classes. Stewardship is using our influence with companies and issuers to help them innovate and operate more effectively, and to partner with stakeholders to drive and advance ESG best practices. And finally, impact. That is the result that we see when we help create positive environmental and social outcomes from our investment practices, products, and stewardship activities. Collectively, this foundation works in collaboration with one another. It's this holistic approach that enables us to meet our objectives. And we have three primary responsible investing objectives. First and foremost, responsible investing helps us manage risk. Managing risk has always been core to our purpose and how we deliver for our clients. We believe that an adequate risk assessment is incomplete without at least the inclusion of fundamental environmental, social, and governance factors. Our second objective with responsible investing is to take advantage of emerging opportunities. For example, as companies, communities, and countries look to mitigate the effects of climate change, investment opportunities continue to expand, and responsible investing helps us take advantage of them. Finally, we believe that by using responsible investing frameworks, we are able to seek and improve long-term returns. Over time, an adequate framework can position an investor to better protect themselves against excessive downturns while not impeding and potentially improving outcomes during an upturn. At TIAA and Nuveen, we see the investorable universe as a spectrum that can include different approaches, intentions, and outcomes. The implementation of each approach, product, or philosophy embedded with ESG integration and stewardship can allow investors to choose the option that is right for them and their clients. Impact investing, as you see on the screen, is one of those options. Nuveen has been actively involved for more than 30 years in impact investing. We define impact investing as the intentional investment of capital in assets or companies that have a direct, measurable, and positive outcome on society or the planet. Impact investments to us must have a dual objective: to provide a competitive financial return alongside positive real-world outcomes. Over the past 3 decades, TIAA, as our parent company of Nuveen, has committed more than $3 billion towards impact investments in real estate, private equity, and private credit. Importantly, impact investing is different than philanthropy. Philanthropy, we think, is an important way to have a positive impact on the world, but we see it as outside of the bounds of the work that we do for clients as an asset manager. Today, Nuveen manages more than $10 billion in impact investing strategies in public fixed income, direct real estate, and private equity. TIAA manages assets on behalf of Nuveen manages assets on behalf of TIAA as well as third-party clients. Each impact investing strategy that we deploy has specific and unique impact objectives. In our real estate portfolio, we are investing in affordable housing and sustainable community development. Our impact private equity fund is investing in companies that support an equitable climate transition by expanding basic services to vulnerable populations, while also increasing efficiency, reducing waste, and mitigating carbon emissions. And our public fixed income strategy drives capital towards issuers that are investing in affordable housing, community and economic development, renewable energy, climate change, and natural resource conservation. Nuveen has established proprietary impact product standards. These standards help integrate impact into every step of the investment lifecycle. These standards ensure consistency across impact asset classes and our strategies, and they provide a foundation for how impact can be measured and reported by each strategy. We have incorporated industry best practices and tools into our standards. For example, each of our impact investing strategies use metrics from the IRIS taxonomy, where we measure and report on the impact of our investments. This taxonomy was created by the Global Impact Investing Network and provides a common set of definitions for how investors should measure their impact. Nuveen is also a signatory of the operating principles for impact management. These 9 principles outline best practices in how impact should be managed throughout the investment lifecycle. Nuveen was the first US-based asset manager to report on and verify our alignment with these principles. You can find a copy of our annual disclosure and verification results on the Impact Principles signatory website. In addition to the firm-wide disclosure we do, every strategy produces an annual impact report. These reports include key performance indicators used to track the social and environmental outcomes of our investments. We see on the right-hand side of the slide an example of some of our reporting from our fixed income and private markets reports. Last year, our Global Fixed Income Impact Report was recognized by Environmental Finance as the Impact Report of the Year for investors. We're very proud of this because we think that it recognizes Nuveen's outstanding transparency, detailed case studies, and data-driven approach to impact. TIAA and Nuveen are excited about the continued growth of impact investing market. We anticipate that growth will only continue. The Global Impact Investing Network estimates that the global market for impact investments has reached approximately 715 billion assets under management in 2020. Some estimate that it is actually even higher, and we suspect that that trajectory will grow. But we know with growth and with scale, challenges will remain. And many of the challenges that we faced in the last decade will continue to be part of what we do and address moving forward. And I see 2 primary ones. The first will be, how do we continue to verify and measure the impact that we're having through our investments? Doing this at scale will be important for us to combat greenwashing or impact washing and to provide credible evidence for investors on the real world outcomes of our capital. The second challenge we face is specifically in terms of processes and best practices related to good impact investment management. We know that integrating impact throughout the investment lifecycle requires behavior change, process change, and new operations. In order to scale and drive opportunity at scale, we know too that our operations must evolve. Thank you so much for your time, and we look forward to working with you in the future.